I'm starting because I will provide a somewhat pessimistic picture of the debt situation in China. So I remember a few years ago when I was here, I was talking more along the line of just local debt in China, and there was an incredible amount of it. At that time, of course, people in China said that I was crazy, but of course the Chinese government has come to acknowledge and higher amount of local debt. Most recently, I think one figure that was thrown out by Ministry of Finance was 16 trillion renminbi, which is you can do the math. The GDP, nominal GDP last year was 60 trillion renminbi, so 30% of GDP. But today, what I want to focus on is the aggregate amount of non-financial debt, which is if you add the debt of households, government, and firms together, what is that amount, and also whether that debt is sustainable. So more importantly, the aggregate level, I would say, actually is not such an important concept at this point, because everybody is highly in debt. The U.S. is highly in debt. Japan is very highly in debt. Europe is highly in debt. The question is how sustainable the debt pile is. And I would argue that that totally is determined by interest rates, which in China is extremely high relative to other highly indebted countries. Okay, so why is this question important? So A is the scale is enormous. So by my calculation, non-financial debt in China totaled around 25 trillion US dollars. So this is not renminbi, US dollars as of the end of 2014. Much of it held by domestic banks, right? So China, to be sure, does not have a high amount of external debt. Although external debt is quite high by this point. My calculation is that it's over $2 trillion, but still relative to GDP is still pretty low. So again, non-financial debt is debt, not just bank loans, but also shadow banking stuff that's owed by non-financial firms, individuals, and government. In contrast, the entire US commercial banking system is only $15 trillion. So basically, a non-financial debt in China is actually larger than all bank assets in the United States. So then, of course, China would say, well, that's because US depends on equities as financing, so it's an unfair comparison, which is true. But China is still a developing country, and for a developing country to accumulate such a large pool of debt is quite extraordinary. And despite attempts to slow down the pace of leveraging, in 2014, again, by my calculation, this non-financial debt still grew by 17%, while nominal GDP only grew by around 9%. It's a little bit below 9%, actually. And finally, if the banking system in China got into trouble, no country or institution in the world can really rescue it. To give you an example, the SDR, which is the pool of money that the IMF has, is around $300 billion. That's only 1.2% of non-financial debt in China. So if there's any sizable problem in China, the IMF is certainly not in any position to rescue the Chinese financial system. Chinese total non-financial debt as a share of GDP among the highest in the world, but not the highest by any means, right? So it's close to 250% of GDP. Both the EU and Japan are actually higher. But the increase in non-financial debt as a share of GDP is the fastest in the world, right? So if you just look at basically how much debt is increasing and then you divide it by nominal GDP every year, it's actually over 30%, right? So every year, the amount of debt actually, again, not just government debt, but firm and individual debt, it's increasing by 30% of the entire economy every single year, right? So basically kind of a third of your GDP, not even growth, a third of your entire GDP is generated by debt every year. Okay, here's another depiction of that. So you see, this is only till June 2014. These are 12-month rolling GDP, nominal GDP increases. China's been around 4 trillion renminbi. Every 12 months, the GDP grows by around 4 trillion renminbi. But the debt is increasing by something like 16 trillion, 17 trillion renminbi every 12 months. So the rate at which debt is increasing is vastly, vastly faster than the rate at which the economy is growing. So I would say this is what makes China's situation not very sustainable because of this kind of debt dynamic. Okay. Why has credit expansion become so inefficient? Just in the interest of time, I'm just going to be very quick. Basically, the short story is that in 2008, 2009, China had a massive stimulus. And after that, they didn't deliver from that. They kept going. They kept wanting to grow on top of the massive stimulus. And so basically, the debt pile just became enormous. That's the short version of the story. But I would argue that the outstanding debt amount is not important. It's the cash flow demands from interest payments that can lead to liquidity problems, right? If interest rate was 0, as long as banks are willing to roll over the principal, the entire financial system is actually quite stable, right? So my favorite example is like, I'm a professor at a state university, my salary is, say, limited, and if I were to take out a $5 million mortgage, people would say, Victor, you're very irresponsible. And to be sure, if my interest rate on my mortgage is 3%, $5 million, I have to pay $150,000 a year for my mortgage. That's my salary. I would go bankrupt. I'm going to get wiped out in 1 year. But think about if my interest rate was only 0.2%, which is actually what Europe, Japan, and the United States is paying on 1-year treasuries, 0.2%, then my interest payment actually is just $10,000 a year, and I can totally afford it even on my meager salary. So the interest rate actually is enormously important, right? Right. So I'll skip over this in the interest of time. So what I then did is to say, okay, let's calculate the interest payment for all debt in China every year to see how much it is. How much does it cost to pay interest every year in China, and how does that compare with GDP every year, right? So it's very simple. I just broke the debt in China, different categories of debt, into all the different categories. I try to figure out the outstanding amount of that. And then I just multiply all the different categories of debt to the average interest rates of all the different categories of debt, right? So you just basically multiply the principal by the interest rate, you get interest payment. It's just very simple, right? So you take out a $5 million mortgage. If you're paying 3% interest, your interest payment is $150,000 a year, right? So when you do that, you find something very interesting. Prior to 2012, the increase in nominal GDP every year was greater than or equal to the interest payment on all outstanding debt every year. And so that I would call that a healthy kind of dynamic, because your economy is growing by more than how much you have to pay interest. And so in theory, even though in the real world it doesn't exactly work like that, in theory there's like more income for the country than what the country has to service in terms of interest payment. Again, I'm vastly, vastly simplifying everything. The problem is, starting in 2012, the interest payment became higher, and actually a lot higher than the increase in nominal GDP. Right? So if you look at, again, you say in the previous chart, we know that nominal GDP is growing at like 4 trillion renminbi a year, but interest payment on outstanding debt became 8 trillion renminbi, and in 2013, 10 trillion renminbi, and 2014, actually 13 to 14 trillion renminbi. I don't have it on this chart, but this is sort of my calculation. So what that means is that either the central bank has to print new money to help pay interest, or China has to bankrupt a lot of firms to shrink the outstanding balance of debt, or the third option actually is to get foreigners to massively finance debt in China. China is trying to do that, but so far with limited success. Limited but important successes, I would say. Right. So this is why credit has to grow by 35% of GDP every year, is because just to pay interest on the existing debt, credit has to increase by 19% of GDP every year. And on top of that, China wants to achieve 7 or 8% growth. Then basically credit has to grow by like 30% of GDP every year. That's a simple math, right? And if there's any questions, I'm happy to answer them. So again, this is a one-way train. Interest rate will just get higher and higher and higher unless, of course, the central bank is very decisive in cutting interest rate, which it is starting to do. The economic growth, in fact, this is too optimistic because nominal GDP growth is slowing down. So instead of growing at around 4 to 5 trillion RMB a year, it could slow down even more going forward. So of course, the Chinese government knows that this is a problem. They're doing a lot to try to address this. The first thing they're trying to do is to cut down the interest rate. So the highest interest rate is being paid by shadow banking instruments, things like trust products and entrusted loans and underground banks. The Chinese government is trying to shrink that pool of debt. Also, a lot of the local government financing vehicles are paying very high interest rates. So the Chinese government is trying to decrease the pool of local government debt and exchange it by new municipal bonds that are fully backed by the central government where the interest rate is lower. So I think kind of these policies, whoa, I think I just did something bad, okay. So these policies are somewhat effective, but just very quickly, by my calculation, even if a lot of this stuff is done and one were able to depress average interest rates from 8.1% to 7.5%, which this is kind of a slightly old talk, I think the Chinese government has achieved half of that already. And I'm sure that they will be able to compress the average interest rate down to 7.5% or even 7%. The 2016 interest servicing would still only decrease from 17.8 trillion RMB to 16.2 trillion RMB, which would still be nearly 3 times the incremental increase in GDP. So in other words, it really doesn't really help the situation that much. This kind of effort to lower average interest rate a little bit. Of course, you can, so now I would argue the government is increasingly, this is kind of the end of my talk, trapped between 3 very hard choices. One is that I think the Chinese government can impose a massive tax on the population to help write down the non-performing loans. And by massive tax, it could take many different forms. It could be, a bunch of smaller financial institutions going belly up, and the government just say, sorry, we're not going to compensate you. And that means the savings of, millions of people will get wiped out. That's a form of, tax, if you will. Because right now, the central government is backing all these financial institutions. Another form it could take is just massive inflationary monetary expansion. As anyone who's taken economics know, that is also a form of taxation. Or it could be a wealth tax, a massive property-related tax on Beijing residents, let's just say, to use that money to write down some of the bad debt. So that's one option. The other option is the government can issue a massive amount of bonds to write down distressed debt. So then basically the government will just take on all of this enterprise and local government debt, take it all directly onto its balance sheet. That means taxpayers in China will have to pay higher taxes in the foreseeable future. The United States did that to some extent, and actually it did work in the US. The third option, which is actually what China is doing right now, is to print larger and larger amount of money to roll over larger and larger amount of debt. So this is actually what China is doing right now. There's been a lot of discussion about whether China is doing QE or not. In my opinion, it is doing QE. We can have some debate about whether it is, but it clearly is in my mind. That's it. Actually, I don't even know why that's there. So in other words, I think you'll hear a lot of optimism from Xiaojing having to do, I think Chinese government has a lot of assets, and that's true. But the proof is, whether the Chinese government can turn a lot of these assets into cash to help write down this debt. And if the Chinese government is able to do that, then I would say there is some optimism. But otherwise, it is stuck with these very kind of hard choices going forward. Thank you very much.